Welcome back. Well, the bank Nifty has now moved back into the green, and the Nifty, it appears that buy on dips really is playing out because the Nifty is back up towards the high point of the day. So pretty good going out there. But as promised, let's get chatting with the management of RHI Magnesita. They raised close to 900 crores via the QIP route. Now, with the help of these funds, the company plans to modernize some of their operations, capitalize on the opportunities as well in the refractory market here in India, as well as West Asia region. Mr. Parmod Sagar, the Managing Director, as well as the Chief Executive Officer at RHI Magnesita, joins us on the show. Hi, Mr. Sagar. Good morning. Thanks so much for joining in. Good to speak to you actually after a while. Now, you had taken a board approval to raise close to around 1,500 crores. You have done a preference issue of around 200 crores to the promoter entity, a QIP of close to around 900 crores. So 1,100 crores done. Will you be looking at raising further money via equity? And also, if you could tell us, what will this money be used for?
Okay. So we have taken an approval from the board and as well as our shareholders for 1,500 crore, but we thought we will be going for 800 to 900 crore, which our paper also shows. And we very fortunately got almost 150% subscription, but we stick to 900 crores thanks to our investors who have a lot of faith on our company. 200 will come as preferential from the parent company, which also shows a lot of confidence on the local management, local company. We don't have any plan to further raise.
Okay, no plan to further raise any more equity. That's good. And what you're going to use this money for? Close to 1,100 crores. Repay debt? If yes, how much?
Roughly 750 will be repaid. We had a bridge loan. So 750 will be paid back as and 300 crore roughly we are going to use for modernization of plants which we acquired from Parmod Group. And roughly 100 crore is regular capex.
Okay, so 300 crores you'll be using for modernization of the plant and 300 crores for regular capex. Any inorganic acquisitions that you have planned?
You know, our strategy to grow inorganically, we did this in past years, and I would not say no. Yes, if the opportunity will come, it will not be as big as we did in last few months, but yes, we can do it.
Okay, so when you say we can do it, anything that you have earmarked, any kind of number that you're looking at? I mean, how much is the amount that you have set aside for inorganic acquisitions, and would you be looking to do it in this calendar year itself?
You know, nothing is on the table, frankly speaking, but if something comes up, definitely we will do, but it will be in the range of, say, 150 crore to 250 crore, not more bigger.
All right, so that will be small if in case you're going to be doing that as well. I think Sonia is asking that because you've done such a big dilution. You know, you've done a QIP, you're doing a pref issue, you're also issued shares to Dalmia. So just wondering why you're so wary of raising any debt. Talking about that, you're going to be repaying 750 crores of a bridge loan. So post that, what is the debt in the books?
It was about 1,300 crore roughly.
Yes.
And you know, we were not very. Actually, we are not independent company. We have a global company also, and global company has a lot of debt in their balance sheet, and this debt is also going to sit in their balance sheet, which is not good. So we decided to go this QIP way.
Indeed, it was a very big equity dilution. I get the point. The parent could be a little bit more leverage, but the debt in the listed entity here in India, it'll be around 550 crores post this repayment.
It will be like this only.
550 crores. All right. I want to ask you about a couple of acquisitions then. You know, on the Dalmia refractory business that you picked up, you were telling us that it's functioning at around 55 to 60%. You're looking to ramp it up, and also you're looking at upping the margins. So give us a couple of numbers. What will the margins be on this asset in FY24? You had said you're going to take it to mid-teens. So could you confirm that? And also on this asset, I think earlier you had drawn out a capex of around 300 crores. But that number was up, right? What is the updated number? Margins and capex.
Yeah, number is same, and you know, it is so early to give any number about the margin and all. It will take probably 4 to 6 months time to really ramp up the thing, improve the productivity, reduce the scrap rate and all. But I can say the number will be in double digit at least.
Okay. All right. In double digit margins is something that you're looking to hold on to, right?
Yes.
Okay, got that. Can you tell us what is the plan on Dalmia's holdings in RHI? I mean, will that be some kind of a overhang? Because I think they have about 14.3%, if I'm not wrong, as per January data.
Absolutely. Absolutely, but I think Mr. Parmod Sagar is the right person to ask this, whether they will hang on or not.
No, the worry is, Mr. Sagar, the worry is for your shareholders, right? Because such a big holder will have 14%, and I think the lock-in will expire in July or August.
30%. Yeah.
So what happens after that? That's what, that's why Sonia asked you that.
We have not discussed with the Dalmia Group as of now, and we understand they can dilute a little bit there, but I'm not sure really. Sorry, I cannot give the right answer.
All right, interesting. Now, because on their con call, they have said that they want to exit all these non-core businesses. So that's why the refractory business has moved out of the listed entity as well. What about on high tech? The margins out there were much better when you acquired it, I think 27% odd. But what is the sustainable margins for that particular asset that you acquired?
I think 20 to 25% should be the sustainable one.
That's a very wide range, sir. 20-25%. Will it be closer to 20 or 25%?
I should say in between.
In between, okay.
Okay, in between 20 to 25%. Got that. Overall, for your growth, what are you targeting? I mean, you've done about almost a 20% growth in the quarter gone by in Q3. Do you think that is a level that you can sustain in FY24? If not, what is the average growth that you're looking at?
We are in a blackout period, so I cannot give a number, but I would say that the revenue should be double in this financial year from the last year.
Right. Give us further numbers, sir. Now you'll have both these two assets consolidating. High tech, I think, will add close to 250-300 crores, I think, in terms of revenues.
Right.
Dalmia, I think, at optimum levels, I'm guessing it could do around 1,600 crores. So you're currently doing around 2,000. What is it, sir?
Not really. Dalmia number should be around 1,200 crores.
1,200 crores for this year, but I think peak levels are around 1,600 crores. So for FY24, 1,200 crores from Dalmia. High tech should be around 250 to 300 crores. And you're currently going at a run rate of around 2,400 crores for the year. So if I add all these three numbers, you should end, FY24 with a number of close to around what? 3,800, 3,900 crores approximately? Closer to 4,000 crores?
4,000 crores.
4,000 crores for FY24. And what kind of margin should we look at for the consolidated entity? That's the existing entity, plus you'll get both those two assets. Dalmia, which is margin a little bit lower, while high tech is better. So consolidated entity, what should margins look like?
14 to 15% should be sustainable margin.
All right. And your market share currently is around what?
It is about 30%. 30%.
Okay. All right.
Yeah.
Okay. We will leave it at that, sir. Thanks a lot for joining in and speaking to CNBC TV.